Good afternoon. My name is Scott Redler, Chief Strategic Officer at T3Live.com. Welcome to today's recap. It is Wednesday, the Wednesday before Christmas. And everyone's asking, will Santa come tomorrow? Well, hopefully for the kids, but for the market, at this point I would think that Santa arrived a little early. You know, if you remember from Monday's morning call, I talked about probably what could happen if we do get some kind of seasonal Santa rally. Where could we go? And then also wrote about that in the notes. Hopefully it's helped. And now we're here. So the question is, you know, was that it? And is there a little bit more? Or does this start to, you know, just start to squeeze up? Because I do think that some shorts are probably getting, you know, a little bit uncomfortable today as the bulls are starting to penetrate into the moving averages. You know, but a lot of the recent few days were, you know, pretty much led by the dash for trash. You know, a lot of those over crazy, you know, beat up commodity names all bounced. And at least some of them gave us some igniting bars, and I think some of you guys took advantage of it. So let's just get right to the charts. You look right now at the SPX. You know, you look at the chart, you know, it's always easier, you know, after the fact when you look at like how you had that flash crash low, and then you had your double bottom. And then remember when it took out this resistance, you had this, you know, trend above the 8-day to get back to prior highs. Pushed a little bit above here, got probably people out, and then we, you know, basically turned into another, you know, another range or another pullback. But if you look at where the pullback came down to, all it really came back to is where we broke out from, you know, middle end of the range. So it wasn't like we fell apart, but when it happens, it feels like you are. So, you know, with that being said, you know, you could draw a line like this. That's one, you know, descending trend line, and then something a little bit more specific on a micro level and getting kind of close, right? Here's your high, lower high, lower high. You know, are we going to get some kind of lower high right around here with tomorrow being Christmas? And then obviously a few sessions next week for New Year. So at this point, we are back to flat on the year. So this is pretty much exactly where we were a year ago. You know, I guess if you close your eyes, you know, and bought the spiders last year, you made nothing. You know, and not saying it was easy this year to find these active moves, but we've had so many of these like 4 to 8% moves that were all pretty much ignited by some kind of red dog reversal or some kind of, you know, reversal bar that at least if you took out 2 or 3% of each one of those, you know, you could have put together a year either which way. Now we just talked about what led. You know, I came in long today, the XLE, thinking that we get some kind of bounce there, and it wound up being a little bit actually more than I thought. You know, you go across here, you know, you had a little bit of an overthrow. Okay, here was your little doji. Yesterday got me long when it took this back, and I just felt like the sentiment was too, you know, it was just too negative around oil. Okay, I figured if the market wants to rally, they may do, I thought maybe a January effect play, but it actually started a little early. And we mentioned it probably could get up to this spot if it wanted to, you know, thinking that it would fill the gap. Not only did it fill the gap, it, you know, opened up above it and closed strong. So what does that say? You know, it probably says there could be a bit more follow through. And the XLE has another, this is where, remember, it broke down from. Remember we talked about this head and shoulders top? Look at that. Left shoulder, head, right shoulder, measured move from here to here. Basically, that's what, you know, gave you this. You know, just always a little hindsight just to show you when we watch it and look at it, and then you had your break right there. But anyway, you know, this 2-day move doesn't seem like a lot, or a 3-day move, but this is what could make your week or your month when you catch it. Now we're right back into resistance, so we'll see, does it want to fill another void? And if it does, that'll probably keep the market going. You know, OAH is actually, were even stronger yesterday than the XLE, and you know, now you have a gap and probably, you know, some room to here also. So, you know, you want to figure out where it can the easy move get to, and then where if they push the envelope a little bit higher. So that's what kind of led there. And I think, I'm sure if I went over it this morning, but talked about how like Alcoa and like FCX and some of those guys were perking up. And, you know, again, these things were up huge. Okay, and yes, is it the dash for trash, and has this thing been annihilated? It has, but when you find patterns, okay, like a lot of guys were talking about, if Alcoa could get above this spot, go long, and boom, if you did it yesterday, there's your day-and-a-half move, and now you'll see if it gets sold into the 200-day. And then when Alcoa broke out, some guys like, let me get long FCX. It's been a horrendous move, but end of the year, this is the type of stuff that goes. And granted, it's been absolutely annihilated, but, look, yesterday woke up a little bit, broke this little descending channel here, day one. Who knows? Maybe it gets back to this spot, and that's that'll be 30%. So you want to, those aren't the easiest trades to find, and you've seen this happen and fail. But again, if you were out of the trade, you get to find some little nuggets where, like, one man's trash is someone's treasure. Well, somebody made some good money in this into here, and who knows? Maybe it does continue a little bit. So that's really what was on the move today. A lot of the oil names and a lot of the beaten up commodities. Because high beta, if you would have thought Santa was going to ring the doorbell, in Google, Amazon, and Facebook, and you were there, it was definitely frustrating. You had the spiders go from 200 to almost 206, and those things did nothing. So it just goes with the rotation of money, and that's what happens. You look here at Amazon, it's still. You would think, okay, so conventional wisdom would say that, okay, spiders just went 50 handles, and Amazon did absolutely nothing. So if you focused on this and overtraded it, you probably got hurt. Some guys might even be shorted, saying, you know what, they're going to sell these over-owned names, they're going to continue to go for the ones that have been beaten up, I'm going to be short. Probably the most frustrating thing would be if next week they go for this, because they mark it up into the end of the year or new money takes it to the high. So, don't lose sight just because it showed it was out of play. There's a difference between breaking down and just being out of play when something else is in play. Google also was out of play, but still near highs and holding in there, just wasn't where the action was. Okay, if you were in it all year, you did a lot better than those other broken names. But if you were in those broken names in the last 2 days, you did better than you did if you were sitting in this. So there's always a time and place for everything. So the question is, does new money come into Google and Amazon, and when the start of the new year, or does next week, do they mark up the go-to names that have been so beaten down? You don't know. So we'll see what happens. People didn't know they'd go after the trash this week until you saw some igniting bars in certain spots, and and then it wound up evolving into a decent trade for a lot of you guys out there, especially on the VTF. Also in my note I talked about the IWMs, where it could go. Figured it can get back to 115. I hate when I write better than I trade, and sometimes that happens. On Monday I'm like, we could see a move in the Russell back to 115. Here it is. And now I guess it can go a little bit higher. In my note this morning, like, if the IBBs could take out 330, it'll probably get to 340. So if you want to be in for that kind of move on the IBBs, go for it. And pretty much, that's what happened. Why 340? Because 340 is resistance going across. And now this actually looks pretty good. Above a few of the moving averages, consolidating well. The bios, after breaking down and making a bunch of lower highs, and now has pretty much a sideways channel that if it wants to get above this, you can see 347. But lots of new base building. That's what we like. We like new base building situations, and this has done that, and maybe that gets another move. We also this morning, I was like, if Apple gets above yesterday's high, maybe there's a move to 109, 110. Granted, it's broken, and granted, it's been showing relative weakness, but for the week, for the day, something to do. We also mentioned, I'm like, what, if the time to have sold Apple was when it broke right in here and lost the moving averages, or the time to have shorted down here, probably not. So, you line this up going sideways, and it wasn't a huge trade for a lot of guys, but if you were looking for something cash flow to do, okay, and you bought when it went over yesterday's high, first time in a while, you made a little bit of money in Apple. Okay, where can it go? I don't know. I guess this is why we said this moving average. I guess it could also go right into here, which is a little bit higher. So if you're long it because you're like, what, it held here, turned up, was strong today, candidate to take overnight for a little bit of follow through into tomorrow. But again, that's because if you sold it correctly up here after it didn't hold half of this day, or you sold it there, you have the luxury to scalp it down here. And if you covered down here, maybe, who knows, maybe you're reshorted, but we'll see. So that's kind of what a lot of people who are having success are doing. They're playing the ends of the envelope and the ends of the ranges. Nike gapped up and didn't hold. Pretty ugly looking bar. I don't know if that means game over for Nike, but this kind of day to take notice is always something that, probably tells me that, it's going to need a heck of a lot of time. Unless it repairs real quickly, that, selling the news down, usually changes the trend. So be careful there. Remember when Under Armour changed. Under Armour people, didn't get out of the way, on this day. I remember watching and I'm like, you know what? Under Armour changed. It should never have broken this pennant right here. That was your get out of Dodge, okay? And basically, if you got out of Dodge, you weren't in for what was a ride to the downside. Look what happens when it went below the 8 and 21 day. It stayed below this entire time. Now maybe get a little bit of a bounce to here, but below the 200 day for a while, below the moving averages, a lot different from when it was riding the trend to the upside with Under Armour. So these rules help you. Again, you're in swing longs when things are above the 8 and 21 day. Okay, when they break it, you get out of the way, you get tactical, so you could trade ends of the ranges. So again, the last few days were not the go-to names that have been strong all year. They have been the dash for trash. Was that it? Maybe. Is there a little bit more? There could be. So if you were in it yesterday into today and you took half off, great. If you just shorted today because it's been the trade to do, you be a little careful and go further. As far as the indices, we talked about getting back to 205, 206 in the spiders. It's actually there. It's right into this upper end. And at this point, if you did not buy on Monday, okay, I don't think you should have been buying the close for Santa tomorrow. And if you just shorted the close, okay. I do think you'll be able to trade your way out of it, because into this spot, I think it's going to have a little bit of difficulty. So if you feel like you don't need to be perfect and you said, I'm going short the spiders tonight, or at least, if you're still in 6, 7 longs, you said, okay, I'm going to short tonight, as a hedge, I think you could, if we opened up again tomorrow, you could add some, okay, to trade out of it. And if we open down, you can buy some of the strong stocks that have been working. So in conclusion, Santa already came. I don't think if you bought the clothes for Santa tomorrow, I think you're a little late. The presents are already in your stockings. If there's going to be more than this, then we'll see if we could actually hold up a little bit. And then if we hold up a little bit versus just go streaky the other way soon, then perhaps there's more to this move, and maybe we get some new flows coming in the beginning of the year, and they have to pay up, and then we actually break above the range. But for now, we're smack back into the middle of it, penetrated a little further than the bears would like. And this market's been punishing anyone who starts anything early. If you started being long too early last Thursday, Friday, you might have got stopped out into Monday. If you started shorting yesterday, thinking that we're going to fail into some of the lower end of resistance, so we opened up tomorrow, you might get squeezed out of it if you didn't get squeezed out today. So you have to know your areas, know your price points, and know your thresholds for pain, and sizing does help. So in conclusion, hope you had a great week. I'm not going to be in tomorrow morning. I'm going to be trading in Short Hills. Have a very Merry Christmas. If you celebrate it, if you don't, it's always fun to, just enjoy the holiday season. And I wish you guys the best. And just, again, if this year hasn't been your year, don't try and make it back in the last few weeks. And if you haven't had a great year, I will say it's been a very tough year for traders. Even like for me, I've been doing this for 15 years. This is probably like, I wouldn't say my worst, but like my third worst. So put it in perspective, and then also put it in bigger perspective. I was just talking to some of the guys on the floor two and a half weeks ago. I was on my face down, under anesthesia, with them carving out my L5 and scooping out my L4, and I couldn't walk and get out of bed for 3 days. And now I'm walking around, and I could do things that I enjoy doing. So, a bad P&L day or week or month doesn't define you as a person or even a year. Just brush it off, build back, get some positive days. Get some confidence, and then, who knows? Maybe you'll start hitting it harder, going a little faster, and you'll be back more of yourself. So with all that said, I'll probably be on Twitter. I'll see you there, and if not, I'll see you Monday morning at the call. Have a great night.